Hey, this is Jack from Alpha Charts with a market update. Today is July 8th, 2023. Hope you all are doing well. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions, some of the equities mentioned. Know your time frame and risk tolerance. All right, so I put out a tweet today or yesterday saying that unpopular opinion, this still could be a counter trend rally, and it got passed around quite a bit, and most responded that I was crazy and that we're in an uptrend and so on and so forth, which was actually an interesting response. So let's go over some of the things that I'm watching and why I'm starting to take maybe a little bit more of a cautious note in this market. Okay. So I wrote down a whole bunch of points. We're going to go through these one by one. And this is what I'm thinking. So first off, I agree. We are absolutely in an uptrend. And I'm definitely not saying, get defensive. Not what I'm saying. But what I am saying is that looking forward, we have areas of supply that are going to be coming in probably over the next few weeks, probably towards the end of this month, maybe beginning of August, as earning season also comes into play, that potentially are going to be areas of resistance. Our first one will be up here in the S&P. This is about a 5% move higher, right? So we're not talking about like these giant areas forward. This is about 5% higher is this green area. If it makes it past this one, all-time highs over here is 9% higher. So these are two areas that some significant supply could be found in the market. Yeah, I'm not saying we're going back to new lows or anything like that either. I'm just saying these are places that potentially we may need to be much more cautious. And I would want to sell into this than be buying new material into here. Again, getting more cautious, taking some profits out of the market. All right, so this is one S&P 500, right? Now let's look at the Qs. Looking at the Qs, it's at one of those areas now. It looks like it's a healthy consolidation so far. Next area, which is the all-time high area, is about 9% higher right here, right? Sorry, about 9% higher. So we make it up to this 400 level, also a psychological level, is about 9% higher. This is an area, again, I think we need to be selling into and not starting new positions. If we make it above this green area, which I think it's very, very, very likely we do, but we come into 400-ish, that's going to be an issue. Also, let's just keep going. So that's about 9% from here to here. Okay. Again, we're not talking about like these big moves. We're talking 9%, which in over the next few weeks can be done, rather shortly. Now let's look at IWM. IWM, which we would love to see as a leader, is literally a stinking mess, right? This is just in a range, can't get out of its own way. VWAP from the highs is right now resistance and has been resistance for a while. And even if it beats that and gets above it, this 200 level is a big deal, right? And to get to the 200 level, let's just see what this is. It's roughly 7-8% higher. Okay, so all of these, S&P is about 9% higher. Qs are about 9% higher. IWM is, we'll call it 8% higher. So they're all in that 8-9% move higher. And that means that we haven't even hit all-time highs. That's right when people are going to get potentially very, very bullish. We'll see if that works out or not. Now, let's look at a couple of the ETFs that we like to look at. EXTN, first off, transports, right? We just broke out, retested. So far, it's held. But I'm watching this. This is pretty overdone right here. And a 2-day pullback isn't really the strongest of pullbacks, which means I wouldn't, if this ends up being a false breakout, things can get very rough. Now, right now, it's not, and I don't want to get the cart before the horse, but this is looking like it may, show up as a potential false breakout. And if we put in, if the Teamsters UPS strike, that could potentially be a catalyst if they start to price in a strike, which I don't see this yet, but that's out there looming. So again, is it fear? Maybe it's a little fear, but we have to know that it's out there looming, where if it hits, we'll know by this chart if it breaks down or not. Okay, so we got to be watching XTN. That's a big one. ITB, this is the home builders. This has a potential false breakout already showing up, right? So if this continues lower, this is a big deal. And so the one thing that's been holding up this entire market, this entire economy, everything has been employment. And the number one driver of employment is home construction. And I don't need to tell you about how it just drives the entire economy is home construction. So if this is a false breakout here and we are going much lower in ITB, that to me says that there's going to be some pressure in the market. Okay. That's just my opinion on that. SMH back near all-time highs. Again, could not make a higher high compared to this. That's a problem. Again, is this a nice little base it's making? A big base. Absolutely. Everything looks okay right now, right? In here. But if we start to lose this 146, 147 area, I'm going to get much more defensive, right? You have a high and you have a lower high here. This high is a much lower higher than here. So again, nothing is like screaming at me to sell, but I'm saying that this could be a cautionary look to it. Okay. Let's look at some of the sectors. You have XLY, right? XLY is way above the 200-day moving average. Everything looks good. But again, it's in this general area. And even if it goes higher, let's see what the higher is. That's roughly, 11, 12% higher. If it does break above here, that's interesting. But it's got to get above here and still has not made a higher high yet. Okay, that's XLY. Then we have XLK. XLK, again, hasn't made a higher high to this, as you can see here, and it's made a lower high here. So if we get a hard reversal here, where I'm watching this very closely, this 169-ish area, right where the 23-day is, and then 167, and then the 50-day, right, which is interesting, right in this area, and then so on and so forth. Okay, so I'm not convinced that this is where I want to start positions. It makes me more cautious. Price gets above here, I'm much more bullish. We're not quite there yet, right? And I'm saying we're not going to get there, but this is my own worry in the market. Here's XLI trying to break out and still is having a problem. Again, a bullish look, basically look, absolutely. But it's got to break out, and it hasn't done it yet. So yes, I love that all these moving averages are moving higher and everything looks good. I'm just saying I would be cautious because we're in a supply zone. When we're above a supply zone, I get less cautious. We're in the supply zone or coming up to a supply zone. This is the time to be, selling, not adding in this area, right? We get above it, then we can start buying again. All right, so all these are at or near resistance. Now you have XLE, energy. We're going to go through all these real fast. Under the 200-day. We have XLF, under the 200-day, right? You have XLV, under the 200-day. You have XLU, under the 200-day. You have XLP, right? Under the 200-day, and it's just a wobbly mess in there, right? So what is above the 200-day? You have XLC, right? And not at resistance. You have communications, which is basically Google and Disney, right? You have XLB materials, which is a tiny part of the market. And again, doesn't even look that good of a chart. And you have real estate, XLRE. Again, with a strong declining 200-day, it just popped back above it for the first time in a while. So again, none of these above the 200-day that aren't at resistance are looking that great. So what is it all about? I think it's all about bonds and interest rates. That is it. Like now we're getting to the nitty gritty at this point. So let's look at TNX. So you see me post about this, and let me just get some of this stuff out of here. so you can get a clearer picture. All right, so let's go to the weekly chart on TNX, okay? So we had a 30-year declining interest rate, right, yield on the 10-year. And back over here in 2022, we broke this downtrend line. We're going to zoom in now. Okay. We broke the downtrend line. It retested it once, twice, and then it screamed higher from 2.6 to 4.2, right? That's a very, very big move in interest rates over a very short period of time. And it was a tough time in the market. And now the market kind of came down and it is trying to move higher. You see this trend line is basically, I could go like that, like this, but you get the gist of it, right? And we had the break of the trend line and the break of this vertical, or I'm sorry, horizontal support right there at 3.9-ish, right? So price is now, interest rates are now squarely above that. And you have this little kind of bottom look there, and it went from 3.25 to 4, right? If it goes to 5 in a quick manner like this, and these are weekly charts, that is going to be a major, major headwind in the market. Now, likely it's going to chop around some, wiggle waggle, and then maybe over a short period of time jump, right? So I'm not saying that it's going to happen tomorrow per se, or Monday. But what I am saying is that we need to watch this, and a strong continued move higher here. It's going to be very difficult environment for stocks to do well. So that's the first thing, TNX. Okay. I think we're at 4%. I think if we could get to 5 or 5.2, and just to scroll back here, 5.1, 5.2 makes sense. This is where it makes sense. Back from 93, back from 95, right? Over here is 2001, 2002, 2006, 2007. Why couldn't we get it back there? All right, that's the first thing. TLT. Look at TLT. So here we go. TLT has been falling for weeks, right? So this is the bond, 20-year treasuries, right? So if bonds are falling, interest rates are moving up, right? They move inverse to each other. So if this area breaks down from here, and it's below 100 already, which was an important area, we break down, where's it going to go, right? Maybe 88. That's a big move again in bonds. This is a weekly chart. So a breakdown of TLT, I think, is a big deal. I like to watch TNX a little bit better, but TLT in the 20-year, 10-year, 20-year. So I just wanted to show you that it's looking very, very similar. Now let's look at credit spreads. All right, here's credit spreads. Again, on the weekly, I've talked about this in the past. What does credit spreads tend to do? Move up, consolidate, up. Move up, consolidate, move up. Move up, consolidate, move up. Move up. We're still in this consolidation range. Now I move these lines around a little bit, but it's technically still in a consolidation area. So that's going to be, again, if it breaks out above this area and we get a strong spike, that is going to be a major negative on equities, period. I'm sorry, I was just looking at something on this other. I don't think I have it up here. It's fine. But that's been a major headwind on equities. I think one of the other things to watch is the 2-10 spread, so 2-year versus 10-year yields. And when that stops being negative, meaning 2 years are no longer a higher interest rate than the 10-year, right? And I wish I had the let me see if I can find it real fast. Give me about 10 seconds here so if I could find it. Let me see. Give me a second. Let's go to Fred. Sorry about this. I should have been. Here we go. I can find it pretty quick though. So this is the 2-year minus 10-year. on through the St. Louis Fed, and you see how it's negative, right? So basically, the 2-year is a higher interest rate than the 10-year. Okay, so when this recovers is usually when you start to see the this when the recession usually starts, right? So it goes negative, and then on the recovery, see how it recovered here? And the gray area is recession. It went negative, it recovered, recession. It went negative, recovered, then the recession. It went negative. I guess the recession happened right there, and this is 1980. Then it popped up, then it went negative again, and then popped up again. And you can see here again, the 80s were kind of weird, especially coming out of the 70s. But that being said, right now we're negative. So on the retake of the zero line, right, parity, then that is where things can get really, really nasty. Now we're not seeing that yet, right? But a retake of that line usually means recession is going to happen, few months later, right? So it's February. It retook it. When did it retake it? In December, right? By February, March, April, February, whatever. We were in a recession, and you see it happens quite often, right? So that's what I'm looking for. This is kind of it did go negative right there, and there was a little recession right there. Anyway, so that's what I'm looking at as well. So, to sum all this up, and I'm sorry if I'm long-winded on this, we're probably going higher for the next at least few weeks. Okay. But I'm also listening to my portfolio. And if things are stopping out, I think I'm in the part where we can say, okay, I'm going to go ahead and keep a higher level of cash, but I'm going to let my things that are working continue to work, or I may take profits a little bit quicker. Because we still want to participate to the upside if there's more upside to come, and not jump the gun on what may happen. But we also need to be aware of what could also happen. I think coming into maybe the autumn, right? The fall, we're on, September-ish, August, September, October, somewhere around there. I think things are going to get a little bit harder. I'm a believer that the market is good 2 to 3 times per year, and we're currently in one of those times, but we're in the later parts of one of those times. And after we get out of this time, it's usually a much harder penny market. And that's what I want us to try to avoid. So at this point, my opinion is, you know what, you may want to start tightening up some stops, start taking profits a little bit sooner, maybe shorten the time frame trading a little bit to get keep your profits that you have. I think it was a good run. We've been going in this run for about 5 or 6 weeks or so, and hopefully you guys made a bunch of money, and your P&Ls are showing it. But I think we're coming to the end of it. Again, we may have 2, 3, 4 weeks left, maybe more, who knows? But for now, I'd want to see. I have to start seeing things either break out and stick, yields come back in. There's so many things. Again, I went through the whole list that I'm watching. Thank you all for being super followers. This video is obviously just for you guys. It's my concerns. It's what keeps me up at night, right? But as long as we're watching it, hopefully we'll be able to sidestep it and potentially even take advantage of it. Okay. Good luck, and we'll talk to you soon. Bye.